Hey, what's up guys? It's Jonathan here, back with another public stock portfolio update. So as usual, we'll do a recap of some of the moves that we made in the portfolio. Then we'll do a recap of how all the positions in the portfolio are doing. We'll also discuss what happened at the FOMC press conference this past Wednesday, and some of the important things that were discussed. So if this video provides you any value, please consider hitting the like and subscribe button. They both greatly help out the channel, help push this video out to as many people as possible. So let's get right into it. So let's start off with a recap of some of the moves that we make in the public portfolio. So as usual, we did our $10 a week deposit into this account. And this week we did a lot of buying, but we also did some selling as well. And as always, if you guys want to see me make these trades live, check me out on Public. I have a link in the description below where if you sign up for Public using that link, you get a free stock up to $70. So if you're interested, check it out. So all of our buy purchases were on Wednesday. Some of them were before the FOMC meeting, and then some of them were after. We bought about $3 worth of Etsy at $149.60. And this was just a simple buy to dip purchase. And at that price, I was paying December 2020 prices for Etsy, which in my opinion is a pretty good price to pay for that company. Then we also bought some Nvidia. We bought about $4 in Nvidia at $235.87 a share. I like the stock a little bit more in the $225 range, but buying it at the price that I bought it at in the long term isn't that bad of a price to pay for it, in my opinion. And this stock is starting to return back to the pricing that it was at before it started its bull run back in October. So we bought some Matterport as well. We bought about $1 Matterport at $10.49 a share. And there was times throughout this week where Matterport actually fell under $9. So Matterport stock used to be a SPAC. And remember, all SPACs start off with a par value of $10. So in my opinion, I think buying this company for $10 is already a pretty good deal. But if you could get it sub $10, you're getting a really great deal, in my opinion. Not financial advice. But there is a reason why this company is so oversold. And that's mostly because this company is currently not profitable and they have no path to profitability in the next couple of years. In a rising interest rate environment, companies that are in this position of no profitability and no plans to be profitable in the near future tend to not do well in these kind of environments. So that's something to keep in mind if you are considering investing into Matterport. We also bought some SoFi. We bought about $1 SoFi at $13.72 a share. And SoFi, just like Matterport, is a company that isn't profitable. They have a path to profitability that's a lot more promising than Matterport currently. There were times throughout this week where this stock was a sub $12 stock. And in my opinion, buying SoFi sub $11 is a really good price for that company. We also bought some trade desks as well. We bought $1 of trade desks at $66.23 a share. And we haven't seen these kind of prices on trade desks since June of 2021. And if we recall back in the spring and summer of 2021, we had a pretty significant tech sell-off. I personally don't think that this is a bad price to pick up trade desks either. So we made all of our sell orders the very next day on Thursday. We closed out our position on Bitcoin. So from that sell, we got $2.22 at $35,565 a coin. Then we also closed out our Ethereum position as well, and we got $1.87 at $2,390 a coin. So now let's go into iPad and we'll do a quick recap on how the portfolio is doing. So currently the portfolio sits at $153.45. And that's kind of funny to me because I remember last week I think we're at $151. Even though I deposited $10 into portfolio, the value of the portfolio went down $7. So it's almost like we didn't go anywhere. So ever since we opened this portfolio, we're currently down almost 28%, or about $60. So the first position we have here is Tesla. And our Tesla position is down about 4% right now. Surprisingly, Tesla has held up pretty well throughout this entire market sell-off that we have been seeing. It currently makes up about 19% of the portfolio. Next position we have here is Enphase, and our Enphase position is down about 25%. Now, unfortunately, our Enphase position hasn't held up as well as Tesla, but it does make a really great opportunity for us to buy the dip on this company. Our Enphase position is currently a little under 18% of the portfolio. Next position we have here is Robinhood, and our Robinhood position is currently down 53%. And it really seems like Robinhood cannot catch a break right now. And currently that makes up about 12% of the portfolio. The next position we have here is Etsy. And our Etsy position currently is down about 23%. And makes up about 11.5% of the portfolio. And next position we have here is Google. Our Google position is down almost 7%. It makes up about 11.5% of the portfolio. Next position we have here is NVIDIA. Our NVIDIA position is currently down almost 14%, and it makes up a little under 8% of the portfolio. Next position we have here is Amazon. Our Amazon position is currently down 16% and makes up a little under 4% of the portfolio. The next position we have here is Matterport. And our Matterport position currently is down 46% and makes up about 3% of the portfolio. I would like to get the cost basis of this position down lower. I'll probably continue to keep buying into this position. So the next position we have here is Cloudflare. And our Cloudflare position is currently down 31%. Cloudflare, like Matterport, is a company that is not profitable. So again, like I said, in a high interest rate environment, non-profitable companies don't tend to do very well. And currently makes up about 3% of the portfolio. Next position we have here is Trade Desk. And our Trade Desk position is down about 24% and makes up about 2.5% of the portfolio. And I would like this position to be a little bit bigger, so I do plan on adding to this a little bit more aggressively in the future. So the next position we have here is SoFi, and our SoFi position is currently down 20% and makes up about 2% of the portfolio. Again, another position I would really like to add to as well, especially if it gets back down in that $11 range. So the next position we have here is Palantir. And our Palantir position is down 43%. Currently makes up a little under 2% of the portfolio. And our next position here is Redfin. And our Redfin position is down 45%. And it currently makes up about 1.5% of the portfolio. This Wednesday, Jerome Powell spoke at the FOMC press conference. And for the most part, this press conference went the way that most people thought it would go. But there's some really important things that I wanted to highlight. One of the things that Jay Powell did mention is that the Fed is very watchful of inflation now. They say that they plan on using the Fed funds rate as a primary tool to handle inflation, and then use balance sheet runoff as a secondary tool. And there was some speculation earlier on that the Fed may use both in tandem, or they may use the balance sheet runoff first before they start hiking rates. But that was clarified in Wednesday's meeting. One of the questions I was asked to Jay Powell during this press conference was, does the Fed expect on doing a double rate hike in March? And when asked that question, Jay Powell gave the obvious answer that he can't predict the future. He basically said that this may not be off the table. And that statement did give the market some panic. We saw a sharp decline in the SPY when he did say that. But with his wording, he did signal that there will most likely be a 0.25% rate hike in March, which is what most of the market expected. And that helped the SPY recover somewhat. When Jay Powell was asked, does he care about how assets perform due to a rate hike, things like stocks and real estate, he stated that the Fed only cares about the real economy, which is their dual mandate of stable prices and maximum employment. And they only care about asset prices as they affect the real economy. So as long as the decline in stock prices doesn't affect the labor markets to the point where maximum employment is unachievable, he doesn't really care about what happens to stocks. And this is a really important signal for us as investors to understand that the Federal Reserve is going to do whatever they need to do to calm down inflation, even if it's at the cost of our precious call options. So just keep that in mind if you are a trader or if you're someone who likes to do a lot of options. I believe for the next couple of months, the Federal Reserve is pretty much going to dictate how the market reacts. So it's very important that you pay attention to what's going on in the Fed. So that's all I got for you guys this week. Thank you so much for watching. If this video provided you any value, please consider hitting the like and subscribe button. I checked my analytics recently, and about 90% of you guys who are watching these videos are not subscribed. So what are you guys doing? If you made this far to the video, you're probably like the other videos I come out with. I talk about all things personal finance, stock market, real estate. So if you're interested, hit that subscribe button. So also let me know what you guys think about the market right now in the comment section down below. I'd love to hear from you guys. Check me out all my social medias. I've been posting more shorts recently, so if you're interested, check it out. And thank you so much for watching. I'll see you in the next video.